Hey everyone, and welcome back to my channel. This is 10-Minute Money, where we talk about money in about 10 minutes, give or take a few depending on the topic and such. Today we are talking about trading versus investing. What is one? What is the other? Which one might you choose? Why is one maybe better than the other, if you want to use those terms? So if you like these topics and these videos, please subscribe, comment, and like. Makes me happy, helps out the algorithm. Hi algorithm, I hope you're doing well. So, trading versus investing. What are similarities and differences? Why might you use one or the other? So, what's important is that with both of them, they're in relations to the stock market, okay? So it could be with ETFs, it could be, usually it's with stocks though. So ETFs and or stocks, even options if you know about options trading as well. Okay, so that's what it's in relation to. So when we look at trading, trading is active. Trading is active buying and selling. Okay, so what you're doing is that you are looking at the movement of a stock. Okay, you're looking at it over minutes, days, weeks, maybe months. And you're saying, okay, you know, most of the time, we would love for a stock to just go here and then go up. It doesn't work that way. Most of the time, a stock kind of goes up and down, and sometimes further down and then up and things like that. So trading would be finding out when a buying and selling opportunity occur. So you might be doing different types of analysis. There's things called technical analysis, for example, which is essentially finding patterns in the movement of the stock and then using those patterns to buy and sell. So if you do it correctly, you might say, okay, here is a buying opportunity. Let's say right here, you can buy here, and then maybe you can sell here. Okay, and then maybe you can buy here again and sell here again. Okay, so you are profiting from these upward movements, and then you're selling before they come back down. Now, great in theory, however, it doesn't always work out that way. So if you're able to do it correctly, you can make quite a bit of money, which we like. However, there are some cons to it. So what are these cons? Why might it work versus not work? Number one, you have to be always online. You have to always be educating yourself, looking at charts, analyzing charts as well. So it does take up a lot of time, which we don't necessarily have. The markets are open between 9:30 to 4 p.m., 9:30 a.m. to 4 p.m., I should say. And there is a little bit of pre and post trading, but really that's where you'll be doing the bulk of your trading. So it will take quite a bit more time. Commissions, okay, so you need to pay every time you buy and sell. So your commission price will increase. Depending on the brokerage you use, it might be about $5 to $10 or so for each transaction. That does add up, right? If you're doing it 10 times, right, that's a $50 or $100. Okay, so you also have time, you have commissions, you have taxes. Every time you make money, you need to pay taxes. So you have additional documentation, you have paperwork that you either need to do by yourself, or you need to get a lawyer or tax accountant for whoever it may be. Okay, so commissions, taxes, etc. If you're wrong, you can lose quite a bit of money. So, you know, sometimes you're right and sometimes you're wrong. You can't always be right 100% of the time. So sometimes you might be wrong and you might lose money. Okay. We also have being prone to trading errors. And when I say trading errors, that can either be errors that you make, or it can also be errors such as the app freezes, or you know, your computer breaks down, or you lose internet, right? Those kinds of things might make you lose out on buying and selling chances that you're looking to get. So you're prone to trading errors, technical difficulties, etc. And then on top of that, you might not make as much as you think you would. So the ratio of how much time it takes, the commissions, etc., you might not make as much as you think you would. And then also there's the emotional aspect. So if anyone does trading or, a fairly active investing, when you have a good day, you're very happy. When you have a bad day, you might be very not happy. So there is an emotional toll that it does take, right? These feelings of either success or failure, depending on how the trade goes and if you make or lose money off of it. So those are kind of the pros and cons of trading. You do need to understand the markets. You do need to do research. You do need to learn and educate yourself. It's not something that everyone can do. I think sometimes these words are used interchangeably. So people will say trading, investing, but they're not. So they're both with the stock market, but they're fundamentally two different things. Now let's talk about investing. So with the word investing, what we mean by that is you're actually investing in a company, okay? So you put money into the company and you are assuming that over the long time, the value of it's going to go up. So the value of stocks obviously fluctuates like this one here. But what you are hoping is you kind of just buy it at whatever the price may be. And then, it kind of goes up and it kind of goes down. But over the long run, you'll end up making money off of it, right? So instead of finding these peaks and valleys and buying and selling more actively, you're doing it less actively. And you might not even never sell. There might be companies that you think, this is a great company, I have no reason to sell it. You might just look for more buying opportunities. Some people will frequently say that. You don't sell stocks, you should just keep buying them, unless you need the money, of course. So investing is a slow growth strategy, okay? You don't need nearly as much time, so less time, less commissions, okay, and therefore less taxes and documents, okay? You are not concerned with small daily or weekly movements, so that's important. Not concerned with small movements. You're looking at things from the higher picture, okay? So you're investing for years. So investing long term. Now, sometimes it does mean you might buy a stock and it might not perform well, okay? That happens. But a lot of times people, when we talk about investing, we always say you invest for the long term. You're not doing it for the short term. So even if the value of the stock, let's say you buy it here, okay, at this point right here. Even if it goes down, some people might get a little bit worried, which is fine. That's a natural reaction. Some people might even buy more, okay, and say, I like this stock. I'm going to put in more money because it's kind of like on sale. And then over the long run, you think it'll go up in value. That's kind of your hope. So investing is you're not so concerned with minute trading and price changes. You're more looking at the long term, okay? So much less time, and maybe you're not checking your accounts daily. Some people like to, I do, for example. Maybe you check your accounts weekly. It varies really, so you can check accounts weekly, maybe monthly, maybe quarterly. I'd probably recommend maybe a little bit more often than quarterly. But you want to just essentially check every once in a while and see how things are doing. Do you want to make any changes? Do you want to diversify a little bit more, etc., etc.? So that goes over trading versus investing. Most people will be doing investing, okay? Most people will not be doing trading. Or maybe you do 90% investing and then 10% trading. Okay, or maybe it's like an 80-20 split. Okay, so you can play around with, the numbers, the diversification, how you want it. Might even be the opposite. So maybe you're an active trader. Okay, maybe you're like 20, or what am I trying to say? Maybe you're 20% long-term, but 80% short-term. Okay, so you can play around with this. It also varies depending on how much money do you have, how much time do you have, right? Depending on your job, your risk, your future outlook, etc. So lots of different things to go over. Tons of content you can read up on as well if you want to learn more about similarities and differences and which one's right for you. And of course, it's not binary. It's not one or the other. You can do a combination of both. So as always, thank you for spending these last 10 minutes with me. I hope you learned something new. Please like and subscribe, and I'll see you in a future video. Bye.